Welcome back. Look, we're going to hit the ground running today because we've got a rapid-fire explainer covering the absolute bedrock of management accounting, cost classification, and traceability. If you've been feeling, kind of overwhelmed by the sheer volume of accounting jargon out there, you are exactly in the right place. We're stripping away the noise today. We're going to master exactly how to categorize business costs, plain and simple. Let's get into it.
So imagine you open up a company's general ledger for the very first time. What do you actually see? Well, you're hit with this chaotic, endless list of expenses, right? Wood, electricity bills, insurance, wages for the guy sweeping the floor, the CEO's salary, machinery depreciation. It is just a massive, tangled web of numbers. So the real question I have for you is, how does management make sense of thousands of random, chaotic business costs? Because let's face it, if you're just staring at a giant list of numbers, you literally cannot make a single strategic decision. You desperately need a system to organize all that chaos. Okay, let's dive into this. The ultimate solution to that chaos? It's a concept called cost classification. Officially, this is defined as the process of grouping costs according to their common characteristics. Now, I know that sounds pretty simple on the surface, but this is the ultimate tool that management accountants use to bring order to ledger chaos. By sorting these costs into specific, logical little buckets, we're basically transforming raw, overwhelming data into real, actionable intelligence.
But why do we actually care, right? What is the real-world value of doing this? Well, the core purpose of classification really boils down to three vital business functions. First up, pricing accurately. You simply cannot set a profitable selling price for a product if you have no idea what it actually costs to make the thing. Second is controlling operations. If your costs are suddenly spiraling out of control, you have to know exactly which department or process is bleeding money so you can step in and stop it. And third, reporting performance. Management needs to see how well different segments of the business are actually doing. Without grouping costs correctly, management is essentially flying totally blind on all three of these fronts.
Right, now here is the master matrix. Turns out, there isn't just one single way to group costs. The source material lays out four primary bases for classification. And let's step through these fast because these are absolutely massive exam triggers. First, nature. Are the costs direct or indirect? The trigger here, is it traceable to the product? Second, behavior. Is the cost fixed, variable, semi-variable, or step? Just ask yourself, does it change with the activity level? Third is function. Are we talking production, administration, or selling? You simply ask, where was it incurred? And finally, time. Is it historical or predetermined? Basically, is this a past cost or a future cost? Memorize those specific trigger questions, and you're going to instantly know which classification basis an exam scenario is throwing at you.
All right, so we've got the broad map. But right now, we're going to shift gears and isolate the absolute most fundamental, highly tested concept on that entire matrix. We are zeroing in on the nature of costs, specifically focusing on traceability. Look, this is exactly where students lose easy marks, and we are going to make absolutely sure that does not happen to you.
Let's lay the foundation. A direct cost is defined as a cost that can be traced directly to a specific cost object, like a product or a specific department. Now, I want you to completely isolate your focus on those two words, traced directly. If you are physically holding a product in your hands, you should be able to point to a cost and say, I know exactly how much of this specific cost went into this specific unit. It's that exact mathematical link that makes it a direct cost.
Let's make this super concrete. Think about a factory that makes wooden tables. Your raw materials, the actual wood itself, is a perfect example of a direct cost. You can measure precisely how many meters of wood went into one specific table. And the exact same thing goes for direct labor, like the wages of the assembly worker who is physically building that table. If they get paid per table, or you track their specific hours per table, that hands-on labor is directly traceable. So visualize the physical components and that hands-on labor, those are your direct costs, for sure.
Now, in stark contrast to that, we have indirect costs, which you'll also hear universally referred to as overhead. An indirect cost is a cost that cannot be traced directly to a single cost object and therefore must be shared. I want to put some heavy emphasis here on cannot be traced and must be shared. You know the cost exists, right? You know the business has to pay it just to keep the lights on and the doors open, but you absolutely cannot link it precisely to one single unit of output.
Let's look at some classic examples of overhead straight from the source notes: factory rent, supervisor salary, and electricity. Think about that factory rent for a second. Let's say you pay $10,000 a month for the building. If you make exactly one wooden table, how much of that rent is perfectly traceable to that single table? You can't do it. The rent supports the entire factory's existence, not just one unit. Same exact thing goes for the electricity powering the lights overhead, or the salary of the supervisor who oversees the whole floor but doesn't actually swing a hammer or build the tables themselves. Because they support the overall operation, they just have to be treated as shared, indirect costs.
And this brilliantly illustrates the exact comparison you need to have locked in your head. On one side, we have direct material, the physical wood used to make a table. It's tangible, it's measurable, and it's directly linked to the final product. On the other side, we have indirect overhead, the salary of the factory manager. Look, they are totally crucial for the factory to run, sure, but their effort is spread across every single table that gets made, which makes it literally impossible to trace their salary to just one specific item. Direct is highly specific, indirect is general.
So this crucial point is summarized perfectly in the source notes with this specific one-line summary. Direct equals traceable, indirect equals overhead. Honestly, I want you to treat this quote as your ultimate exam hacker shortcut. Seriously, if you ever start getting confused right in the middle of a really complex scenario question, just repeat this line in your head. Can I trace it? It's direct. Do I have to share it? It's overhead. Memorize that right now. It is a game changer.
Okay, listen up, because we need to talk about a critical warning. The examiner absolutely loves to set traps using this exact concept. Do not confuse direct production materials with shared operational management salaries. A classic trick is to describe a highly paid factory manager who spends all day out on the production floor trying to trick you into classifying their salary as a direct cost just because they happen to be in the factory. Don't fall for it. Unless they are physically building the unit themselves and their time is exclusively tracked to it, their general management salary is an indirect overhead cost. Never, ever misclassify a shared supervisor's salary as a direct cost.
So we've covered the foundational theory today, but I want to leave you with something real to apply. Look at your own business, or maybe just think about the case studies in your notes right now. Are you truly tracking your overheads correctly, or are hidden shared costs secretly eating away at your profit? Because I guarantee you, if you misclassify an indirect cost as a direct one, or you fail to allocate your overhead properly, your pricing is going to be completely wrong and your control over the business will be a total illusion. Mastering cost classification isn't just about passing an exam, it's about actually seeing the true financial reality of a business. Thanks for joining me on this explainer, and hey, keep that one-line summary locked in your head.